John Higgins, Mortgage One. Happy Monday. Hope you had a great Thanksgiving Day weekend. Lots to be thankful for. And of course, we had a Lions victory, which is nice for a change on Thanksgiving. So, on to interest rates. This week really sets up just for the jobs numbers that are coming out. So, on Friday, we've got the payroll numbers that are coming out. Huge number. Going into that, we have a couple other jobs numbers that'll be kind of teeing up Friday's announcement. But coming off last week's update, President-elect Trump has put forward a Treasury cabinet member that will really, if confirmed, kind of maybe be a little hawkish on debt and that type of stuff that the market is really concerned with. If you look at how interest rates have performed, inflation obviously is the number one issue. Jobs is second. But when you really break down the rampant spending that this country has experienced, over the last number of decades, but certainly since COVID, we've really become fixated on just how much debt can the bond market absorb. We know that a lot of foreign investors buy up U.S. Treasuries, and if that appetite dwindles, there's only one way to attract new buyers, and that's with higher interest rates. So the market really rallied on the Treasury selection, and we'll see if we get follow through this week with a better jobs number. And when I say better, something that shows that the unemployment numbers are not decreasing and that we don't overshoot on the jobs numbers, because the Fed really is trying to affect this soft landing. And they know if they're going to get their arms around inflation, bring GDP down just a little bit in that fight, we need to see some reduction in the jobs numbers. In our industry, we certainly need people with jobs to buy homes. So the strong jobs numbers has helped. The lack of inventory has been the biggest hindrance as far as our real estate industry goes. But the Fed is really trying to thread the needle and work in a very narrow range here. And they'd like to see the jobs numbers come down just a little bit. That way they can continue their fight on the inflation front. So big week again. It seems like every week we have big data coming out that is a major influence on the market. And that's because the market really is unsure which way everything is going to break here. The Fed has said with their 50 basis point cut a couple months ago that they were worried that the economy might start to sag, and they took a pretty big leap there, followed up by another 25 basis points in November. All of a sudden, with the data that's been coming out, it's not 100% clear which way the Fed will be going into 2025, if they're going to continue to cut rates or not. There's even a mini rumor as far as interest rates go that the Fed may actually contemplate hiking rates at some point early in 2025. Personally don't see that, but it is out there and is having an impact on the market. Where does that leave our mortgage interest rates? Well, we're still fighting to get below 7% again. With last week's improvement in rates that we bounced off of 450 on the 10-year Treasury, got down below 420. That's certainly an improvement and brought our rates, at that precipice, or maybe for our high FICO borrowers, just below 7%. So some good news to build on, and hopefully this week's jobs number will do that. We'll give you an update next week after we get the flurry of employment data. Have a great week.